Now, independent economist Professor Bonke Dumisa joins us this morning for a forecast of what we can expect this week in economics. The Monetary Policy Committee is meeting this week and could bring more pain to the South African consumer. Now, the Reserve Bank is expected to hike interest rates by 25 basis points. This in line with the US Fed's decision last week. So the good Prof joining us this morning to take this conversation forward. And Prof, thank you so much for your time. Good morning to you. I suppose, Prof, let's start here reflecting back on what happened in the very last MPC meeting, which could very well perhaps be an indicator of what to expect from the MPC this week.
Thank you. Good morning, Dumelo, and the listeners or the audience. At the last MPC meeting on the 24th to the 26th of January 2023, the MPC did make a decision to hike the repo rate by 25 basis points. But there was a split, a very important split. 3 voted for a 25 basis points and 2 voted for a 50 basis points increase. So all along, up until last week, many of us believed that the MPC will hike the repo rate by 25 basis points. However, the CPI figures which came from Stats South Africa would show that the inflation rate has just increased just a fraction from 6.9% in January to 7% in February. May persuade at least one of those people who voted for a 25 basis point to say, maybe what you are doing is not enough to cap inflation in South Africa. Let's push it by 50 basis points. I hope not, because really a 50 basis point increase in the repo rate will damage the economy, and many people are already selling their properties or have their properties being taken over by the banks because they cannot afford to pay.
Prof, with that being said, any international factors that could also contribute to a decision by the MPC to have an increase in terms of the basis points this week?
You've already mentioned it. The South African Reserve Bank usually takes its cue from the USA Federal Bank. And the U.S. Federal Bank increased their federal interest rates by 25 basis points, mainly because of all the issues about Silicon Valley Bank and the other bank which collapsed, and which all pointed out to the rising interest rates in the U.S. So that may persuade at least 3 members of the South African Reserve Bank to say, let us learn from what happened in the US. If ever we continue being this aggressive in pushing up the repo rate, we may end up in this situation or even worse than what has happened in the USA. So let us keep the repo rate at 25% increase, which would be welcomed by all, because at least we cannot wish that we don't have any change.
Also, just coming back home, Prof, in as far as load shedding is concerned, I mean, to what extent does load shedding also contribute to the fueling of these price pressures that we're seeing?
It is playing a very major role. You must remember that entities like SPAR, and I'm sorry to mention them by name, and Woolworths, and some other retailers have specifically mentioned that they've had to resort to diesel as well to keep everything going, and it is costing them a lot, and that is contributing towards this 13.8% or 14% food inflation that we saw in February. That is one major problem. So let us hope load shedding is going to be at least managed. Now, we see that Dr. Hosiezo Sputla Ramahoba is really enjoying his new job. Let's hope that it delivers. This is damaging the economy.
Now, we definitely witnessed, him settling very quickly and well into the position, Prof. But also, you mentioned consumers earlier on, some already selling their properties because they just cannot maintain their bonds. It's too expensive for them to maintain. What's the prime lending rate looking like then in the country? Because this will seemingly affect consumers' pockets.
Okay. What happens? I'm happy you're asking that question. For us to have the prime lending rate, you take the repo rate. So let us say it is going to go up to 7.5% today. You add 3.5%, and that already takes you to 11% prime overdraft rate. And you must remember that a number of financial institutions do not charge their mortgage rate at that level. They charge even higher. And we're still with car installments. So it's not really good for the South African economy.
Prof, any reprieve whatsoever for consumers? Any reprieve that they could at least find solace in?
Let us say the load shedding issue is managed. I mean, we've not had stage 6 or stage 5 in a long time now. We're dealing with load shedding stage 1 and 2, etc. And as now I'm moving to the area of other analysts. We are likely to see the petrol and diesel price cuts next week, and diesel price cuts are a given. That will help to cut some of the problems which push up the food inflation and the overall CPI in South Africa. And that may actually give us an opportunity to say, at least when the MPC meets next time, it will still have the repo rate increase, but we will be guaranteed that it will not be over 25 basis points. That's the best I can say.
All right, well, we'll leave it there, Prof. Thank you so much for speaking to us this morning. Professor Bonke Dumisa, our economist, just giving us an economic week ahead and definitely talking about that 25 basis points that we can expect, at least analysts are analysing the MPC meeting from the 28th to the 30th. And we'll continue to, of course, track these developments for you and keep you updated as the consumer. We know that you, of course, would be hard hit in as far as your pockets are concerned.